Hi, fellow traders. Well, another Monday in the books. This is actually a really short week in more ways than one. We've had today and tomorrow to round out the month of June and the end of the second quarter. And then we just got the first 2 days of July. And we got Friday off, a long weekend. And like I said, I've been waiting and waiting and waiting. Just a long weekend, it doesn't really mean much when you really can't get away. And me, being burned out, as I told you last week, just being burned out and just needing to get away and decompress and all of that, it takes its toll on you. So I'm looking forward to a little bit of downtime here. But also, if any of you guys supposedly got a message from me through Instagram, it wasn't me. My Instagram got hacked. They were actually using the wrong name anyway. So if you got it, you should have realized that it wasn't on the level. I think they used Ted and versus Ed. So you knew it wasn't right, but I think I got it squared away. But if you do get a message from me that's out of the norm, it's not me. Just let me know. So if I have to just kill this account and then rebuild another one, I'll do that. But wanted to apologize for that. Now, what I want to share with you right now is we all have what it takes to get through. No matter what we're dealing with in trading, we all have what it takes to get through. We just have to decide that we really want to get through it. Not just saying we want to. We have to make that decision, and we have to commit to it. Because, oftentimes we run from our losing trades. And we just run from it. And we talk about how hard it is to follow a plan or to stick to something, to be disciplined or to be patient. But in reality, those losing trades, that's what's going to get us to the next level. Experiencing that being uncomfortable, experiencing these losses, you can't avoid them. It's all part of the learning process. So what you have to be able to do is to learn the lessons from those losses. Don't run from them. Okay, that's what is going to get us to that next level. That's what we're going to learn from. Because look, you got the education, you got all the tools that you need, you've got everything that you need to be successful. You just have to understand what you have to use to get there, and then make that decision, that commitment that you're going to do what you need to do to get there. And that's what I really want you guys to focus on. So I'm thinking, this is the plan, that August 1st, I should be dropping that book. Well, I'm not going to even call it a book. It's something completely different, something really different than what you guys have ever had before. And it really comes from my time as a teacher, and that's how I put it together. And it's a personal guide to help take you through the first 90 days of trading. It takes you from A to Z, from the beginning to somebody coming in not knowing a thing. And it walks you through. And there are going to be other volumes to it, but the first one, it just takes you through the first 90 days. The next one is going to take you through that 90 to 120 days. And then the last one, is going to put you out there on your own. So looking forward to that. Supposed to be August 1st, but if something changes, I'll let you guys know. Also, for you members, I should have this swing trading class done so we can do it Thursday. Wednesday, we're still doing our regular Roadmap to Success segment. I think we're into technical analysis now. I think that's what we start this Wednesday. And Thursday, we should, if something changes, I'll let you know, but I should have it together by Thursday. And it's the swing trading class on swing trading earnings. And in a nutshell, this is what we're going to be covering. It's going to take a couple of classes, but the introduction to earnings, the way I see it, it's not something regurgitated. This is the way I see earnings and the way I use it. We're going to go over the trading tools that you're going to need in order to be successful in trading earnings, how to scan for them, because there's a lot. Some you just need to eliminate because there's no chance of them moving. The earnings technical analysis, how I analyze the trades, the earnings, potential earnings trades, how I use technical analysis for that, how I do the fundamental analysis, and we're going to cover the strategies. There's a pre-earning strategy where you would be in up to earnings, and a post-earnings strategy where you would be in after earnings. Because you don't, I know with my swing trading, my day trading, we have a strategy that we get in right before earnings are announced, and we trade the gap. We don't do that in swing trading, because in the day trading we can react pretty quickly. Swing trading, we're not looking to do that. Plus, some of you guys may not be at 25K. You may not be able to do day trades. So we want to make sure, you want to make sure that you're not put in a position that you're going to have to get scared out of. So there's a pre-earnings where we trade up to earnings, and then post-earnings where we'll trade after their earnings announcement. And it's just as simple as those two. I know up until now, all of the swing strategies that we've covered have been technical. So the earnings is going to bring some fundamentals into the swing trading. But I don't want to go too far into it, but we'll cover that. We'll cover all of that. All right, so let's look at the day. Okay, because I'm burned out. Okay, I am going to not really trade into the afternoon. I'm going to do what I can in the morning, stay focused, be patient, and nail the morning. And then the afternoon, just kind of take it easy and just manage whatever I have left and go from there. That's the goal. So the trades I took this morning, these were just quick trades. Not quick trades, but trading the momentum at the open. So ROKU, this was actually my second trade. And you could see here, we broke down. Okay, we broke down under this level. I thought I gave it enough time. And really, when I added this up, I was up about $200, maybe close to $300. But it didn't quite get to 115. 115 was my target here, and it didn't quite get there. So I waited to see if we were going to reject and come back, but I took it off at break even because we were recovering, and it did go back up. So it really would have stopped me out at max loss, and then it would have come down, because eventually this did get down to the 112.11, and my target on this first target was this level. The next target was 112.48, and that was the level that this thing went to. So I'm happy about the plans that I'm putting together. The price action is making it difficult for trend traders right now. because the swings are just so violent sometimes. But I feel good about this. I did exactly what I wanted to. But hey, if I had been in it or stayed in it later on in the day, I probably would have been able to get some more out of this. But that was ROKU. And then BA, this was the good trade this morning. Here was the opening range high. And you can see we had a big sell candle. Well, there's no setup for an opening range breakdown. Even though we broke below the opening range low, there's no setup here. All right, so we bounced. And once we got through the high, I got in right over this pre-market level here, looking for this pre-market level as a target, as my final target. But I'm going to take profit along the way, and that's pretty much what I did. So I locked in profit along the way. We came back and stopped me out at break even, and eventually, as you'll see on the next chart, this actually broke out and went up to what, 190. I think it got up to 195 after market. So again, my thesis was right on this. It's just the market timing, and then I was done by lunchtime. So it is what it is. But I think I didn't. So I didn't do the P&L, but we made $408 and something once it's all said and done. But you could calculate it too. Most of you guys can calculate it without even seeing it. But that's what we did on BA and ROKU. And then here was the trade later on. This was in my other account, because this is what I had up. I had my all-day hold, which we'll look at in a minute. And you can see this was really a good entry here, but it pulled back and stopped me out. And then look at the rip. So again, I had the right idea, the right thesis. Just the market just shook me out of this, and I had to stick to my stop. But maybe there's really nothing else I could have done, because I was looking for, this was like a point target. And this was my first target. I couldn't let it go past 1-to-1. I'm not going to risk $500 to take it off here on a point. I'm not going to risk 1.5 points just to make a point. Now, my first targets oftentimes are 1-to-1, because I want to lock in something if I get there. And that was the idea, but we never got there. And so I got to stick to my stop. What protects me and what keeps me from really blowing my account and taking a lot of drawdowns is risk management. Even though Friday, was it Friday or Thursday? No, even though Thursday I had a meltdown, I was still smart enough I regained my composure. I took it off, and I didn't go in and try to make it back up. That's the key. But that was that on BA here. And the all-day hold, this was the one that I told you early this morning that I like Facebook for all-day hold, and I laid out the targets for you guys, exactly what I was looking for. Why did I think Facebook was going to bounce? I felt that you had a lot of overly emotional retail traders that just started dumping Facebook. But I knew Facebook is one of those stocks, just like Apple, where you've got some big money funds behind it. Facebook is a popular stock in a lot of funds. So I knew that this thing wasn't going to go far. And if it triggered me this morning, this is a 60-minute chart, by the way. This is what I manage the all-day holds on. I don't manage it on a 5-minute chart because you can get stopped out, spooked out, or whatever on a 5-minute chart. But it held support down here, and we started building off this at the open. And so right before this 60-minute candle closed, we were showing tremendous strength. So I got in right before this 60-minute candle closed. I could have waited and got in here, but it was showing too much strength that I'm like, I need to get in. Plus, I was focusing on my day trading, and I felt I could still manage my risk on this. So 216, red to green, was my first target. The 200, which is not on this chart, but the 200 kind of came in through here, and I felt that we would trade through that. I thought the gravity of red to green would be strong, and that this would be a solid bounce day. And it did exactly what we wanted to. Got to 220. 225 was my final target, which was, at the time, it was right below the 50. But the 50 did come in, as you can see. It just kept coming in during the day. And take it off right at the close. Now, I could have held on to this, looking to try and gain some money off of this, but the strategy is all day hold. It's not swing trading, so you don't hold it overnight. If I'm down, I may want to hold it overnight, hoping that it will pop up, but you don't do that. You take it off. You rinse and you repeat. You do your best every day. Then at the end of the day, you hit that reset button and you start over the next day. You rinse, you wash the whole day off, and you come back in tomorrow with a clean slate. The next day, clean slate, clean mind, open mind, cleansed mind, and you're ready to do it again. And that's what we got to focus on here. So that was 1666.59, not bad. Now, had it got to where, if it actually made the full move, we would have had a pretty good lick. Probably close to $3,000. But, hey, it didn't quite get there. It didn't really do what we had hoped, but, hey, it worked out. Did pretty good. So 2 days in a row. Friday we had the all-day hold on BA. Today, Facebook. Maybe we'll get another good look tomorrow from another stock, and we can run it again. I'm a little bit skeptical about swing trading in this market because we don't know where it's going to be from one day to the next. We had all this bad COVID-19 information to come out. Cases are skyrocketing. There's states that are starting to roll back some of their opening procedures, shutting some stuff down altogether. And we had new home sales come out with like a 44% gain, and the market shot up. I mean, the market is looking for any little bit of good news it can get in order to in order to stay up. I mean, we've got everybody and their mama supporting it, but and all it's doing is looking for this good news. And you could see, let me see if I can find, let me get the chart here. Let's bring the chart up here. SPY. And you can see what it started doing today. Look at it today at the open. This thing started selling. The new home numbers came out. Bam, just completely reverse course. So this thing is looking for anything positive to stay afloat. So with the market being like this, it's just hard for me to have any faith going long in swing trades. So I'm kind of waiting it out to see if the market settles in, and then we could do something. All right, so that's going to wrap it up for me today. You guys have a great night, a great evening, and I will catch you in the morning.